Hey everybody, Boris speaking Forex. Welcome to the weekly technicals for the majors for euro dollar, dollar yen, pound dollar for July 2nd to July 6th, 2018. And I think the big question next week is we really turn back to economics. We are pretty much done, I think, with all of the political turmoil that has hit the markets over the last couple of weeks. The trade war skirmishes have sort of died down for the time being. We are going to get a little bit more skirmish here over the weekend in terms of the Canadians coming out with some tariffs, but essentially most of the fury I think has been spent, and the markets are starting to ignore the rhetoric because it hasn't really followed up with any additional aggravated policy, and we're coming back now to the much more critical component of economic data, growth, and all the things that are going to determine rates and everything and price movement going forward. So this week, of course, we're going to be focusing a lot on U.S. data. And that's going to be the primary move front and center. We'll take a look at the calendar in just 1 second. But in the meantime, let's take a look at the levels because some of them have moved obviously a little bit. The key thing I think this week that's interesting is to be technically confirmed that the 115 remains very much the key support in euro dollar. And we saw this all of this week, all of last week, and I think at this point it looks to be a very, very decent hold unless we get markedly improved data out of the U.S. or some sort of new calamity. And the calamity here, of course, in Europe is Merkel coalition breaking up over the migrant issue. That seemed to have cooled over the fact that the European summit has come to some sort of an agreement. The question is, will her coalition partners agree to it? If she is in jeopardy, that does put an existential threat to the euro. And that 15 is going to be very much challenged and probably tested. Dollar yen, to me, is the focus of this week because if the political stuff just kind of fades into the background, it's the economic data that's going to drive price action this week. And so it's very much worth watching what dollar yen is. We're at very, very key resistance points at this 111 level, and it's really the 112 that dollar yen needs to take out to completely confirm its upward bias. So be watching that very carefully. And also this week, we're going to see if there's any sort of consolidation. Cable got hammered like euro did last week on anti-risk flows. The 130 has held, just like the 115 in the euro has really held. But we're going to need to see some support from economic data, and we do have a lot of UK data coming out this week, so be watching it very carefully. So let's take a look at the calendar here and see where things stand on the major side. From the UK point of view, and by the way, this week is sort of a very weird week for non-Americans because the front of the week is really almost going to be a quasi-holiday in the US. We have the July 4th holiday midweek on Wednesday. And it looks like very likely people are going to maybe taking the front of the week off. Certainly in the markets, the front of the week is much slower. The back of the week is much heavier. So it's very likely, I think, at least from the market point of view, there'll be a lot more activity back of the week than front of the week. And the front of the week could be very choppy, and therefore I caution you about flows. But we are going to get ISM manufacturing on the U.S. side. We're also going to get UK manufacturing data, and then after that, we're going to get UK services data. So the PMI stuff out of UK will be important if you're watching that data set. And then back of the week, starting Thursday, Friday, is really where you get all of the key U.S. economic data centering on jobs that could have a big impact or a small impact depending on what the job growth shows us. So we get Thursday, we have ADP, which is obviously going to forecast the NFPs. We get ISM non-manufacturing, which tends to be a very, very good forecaster of non-farm payrolls. So quite a lot of the data could be priced in by Thursday, depending on where we trade on that number. And then, of course, the Friday number, as always, really the primary focus on the Friday number. Not so much the jobs, but the growth in wages. That's really going to be the key data set that everybody's going to be watching for. Right now, the market is anticipating, I believe, average hourly earnings for 30 basis point increase, which would be significant, and that would really take us almost to 2.7, which is a very decent growth rate. Certainly, anywhere we can go on an annual level at around 3% really would provide a very, very good cushion for a more hawkish Fed policy. But those things are going to be critical. If we don't get those numbers, if they turn out to be disappointing, there'll be much greater sense of disappointment on the wages front than any kind of a shortfall on jobs at this point. So that's really where the focus is as far as the data set goes. Now let's take a look at the charts and just see how the charts are shaping up. This is what I'm talking about as far as the solid wall of support for the euro. You can certainly see this. We've really basically been there for a whole month. Basically spend the whole month holding the 15 level. Close Friday, close today at a very decent pop here. We do have clear resistance. I mean, this is not, I'm not arguing that this is a bottom or some sort of a start of a massive upward trend. The bottom line is euro is still very much in a downtrend. It very much hangs against this 118 top from the ECB pressure. But it's impressive at how well it has held this level. There's clearly buyers at this level. And I think absent of an existential type of a threat to Germany or remarkably strong data out of the US, it's going to be a challenge for the shorts to break the 115. As a matter of fact, the front of the week sort of sets itself up for a move back through the 17s and really sort of a challenge of what is the highs on the 17s here, around the 1720s. Really that whole 17 handle, it basically creates a interesting challenge here, whether we can squeeze ourselves into the 17 mode, but then come closer to 18, euro becomes a much stronger sell than it is a buy at this point, because this overhang in the 18s really would require some very serious impetus for us to push higher. So I think there's a mild positive bias here for maybe another 50 points in the euro, and beyond that, it becomes a much stronger short than it is a long. And actually, let's take a look at a pound before, and then we'll get to the ends, because the pound is sort of a very similar story, but just from different levels. The pound is holding for its dear life against the 130 level. But if we get positive UK data, the pound is notorious, of course, for popping. And I think it's reasonable for us to pop all the way up to 133, perhaps even make a run towards the 134s. A lot of this is going to depend really on the data, because the stronger the data set is, the higher the probability that the Bank of England is going to raise rates. Even if it's just once this year, it's still symbolically important and would provide some sort of a support for cable here. So cable, after just massive sell-off over here, consolidation, seeing the first, I would say, 3 or 4 days of no, or 2 or 3 days of no fresh new lows. That's a generally positive turn signal, and it gives us a chance here to possibly trade this towards the 34 level as we go forward. Now, yen, to me, this is the final and the most interesting trade of the week, simply because we have a very strong long-term trend. We have a nice correction here that held the 108.50, and then last week we held the 109.50, which is again impressive, holding a higher low. But the proof really is not in how you hold the lows. The proof is in, are you going to make new highs? And this is really the big challenge. Dollar yen, absolutely, in order to truly create a breakout trade, needs to take out all this overhang at around, what's the high here? Around 11, basically call it 1150. That's really the level it needs to bust through. If we get positive data front of the week and we get lots of buying through this, and then followed on confirmation by strong NFPs, there's every reason to think that we can be at 112 by next Friday. But those are all big ifs. We really need a lot of support that will then translate into hopefully higher yields on the 10-year, take us to about 295, perhaps even 3, and just put the very consolidative phase of dollar yen behind us and resume the uptrend that we've been having really since the beginning of the year. So that's sort of how the, not the beginning of the year, beginning of April. That's pretty much how the week shapes up. The focus is strictly on the US, but all the price action is very likely to come at the back of the week. Wish you guys the best luck, the best trading. Boris, over and out.